As promised, we have Arvind Fashions reported a muted revenue growth, significant expansion in gross margins, understandable because of the decline that we're seeing in raw material prices. But the important part is how is revenue likely to be going ahead? How's the consumer sentiment? Kulin Lalbhai, who's the Vice Chairman and Non-Executive Director, joins in now. Kulin, always a pleasure speaking with you. We did see the revenue for the company grow at just around 4%. This is lower than your own annual guidance of around 15%. Before your numbers, we did see get some numbers from other fashion players as well. And in their commentary, what we heard that sentiment was rather muted. What are your thoughts on how the sentiment is? And in line of that, would you revise your 15% revenue guidance for this year?
So, we've always maintained that, our revenues will usually be between 10 to 15%. And this quarter, whilst you're right that the markets have been muted, for our results, the lower revenue is largely because of certain phasing of our revenues. So there is a wholesale channel, the multi-brand outlet channel, where we, do wholesale billing. And this year we had an upfront billing because we wanted to build the product into the market early to get better full price sell-through. So in that sense, a little bit of revenue moved into quarter 4 of last year, and that similar amount reduced from quarter 1 of this year. So that's had a little bit of a deflationary impact on quarter 1 revenue, which you should see correct from quarter 2. As far as consumer sentiment is concerned, it remains muted. We do believe it will pick up as festive comes around the corner. We do believe that the sentiment will pick up. But as a company, our focus is on bottom line expansion, and we've had very healthy EBITDA expansion of 190 basis points in quarter 1 as well.
All right. Hi, Kulin. Good morning. Nigel on this side. Well, Kulin, let's talk about a couple of numbers. Now, emerging brand portfolio, that's seen a good growth. What kind of margins do you see in this kind of portfolio? Also going forward, CK will contribute how much to this segment?
As we move forward, CK will contribute more and more. It's already around 50% of that segment. And the reason, the bottom line has corrected is twofold. One, we had certain loss-making businesses which are no longer there. So even in the future, we do not expect those higher losses from the tail brands to come back. And as CK as a percentage grows in that bucket, the profitability will remain healthy. So I think the kind of profitability you saw in quarter 1, it should stay around that mark for the next few quarters.
All right. And what about the power brands? I mean, I presume that a lot of the power brand sales look muted because of this warehouse upfront billing that you've done. What is the margin expectation out there and revenue expectation for the power brands this year?
We've maintained a guidance of an improvement of anywhere between 100 and 150 basis points in our power brand EBITDA every year as the operating leverage kicks in. And I think we've achieved that in quarter 1. And I think that kind of trend line will continue. As far as revenue, we've given the range of 10 to 15% depending on market conditions. And perhaps we'll be a little towards the earlier part of that range for this beginning part of the year. But we do believe that, the second half, when festive truly kicks in, should see better consumer sentiment.
Okay. All right. Kulin, let's focus on the cost side then. In the past, you've been mentioning that your objective is to improve your market share. And you'll also like to spend more on advertising. What's the ad spends currently as a percentage of sales? And could you tell us by how much will it go up?
Our ad spends typically would be around 4 to 5%. There are certain quarters where it could go down to 3% also when it's not a very advertising heavy quarter. But quarter 2, we are going to be spending heavily on our flagship brand, US Polo. It's a brand with a lot of traction. It's getting to the 2,000 crore mark. So it's emerging as the largest brand in the casual lifestyle space. And one of our mandates this year is to really re-energize it fully, whether it is the retail format, the product, and the advertising. So you should expect a lot of visibility in US Polo from quarter 2. We've also gone live with our campaign in Arrow, which is with our brand ambassador Hrithik Roshan. So that's also breaking in Q2. So there will be a lot more visibility of our brands, in Q2.
Right. And, just before we let you go, a word on your newer categories. I remember the last time you said they were around 15% of your sales. This is non-garment, more accessories slash beauty products categories. You expect it to grow 25% plus in that. How much are they as a percentage of your sales now? And what's the prospects there?
So they are a little above 15%, but the big standout for us is our footwear business, which is scaling up extremely well. Even in Q1, it grew on a large base at 30%. And we do expect that business to remain a very strong growth driver for the business, overall. And it's performed very well in Q1.
All right. Thank you for joining in. Just before we let you go, any other value unlocking plans or monetizing plans for any of your brands?
There's nothing at the moment, to update. We remain focused, as I mentioned, on enhancing the profitability and the return ratios of the business and energizing and scaling up the strong brands that we have.
Okay, all right, Kulin. Appreciate you stopping by and filling us in with an update on your numbers. We look forward to having a chat with you. And hopefully, as you said, festive season, second half of the year is far better. My colleague Mangalam is on the shopping list most of the time, so I'm guessing he's contributing as well. But always a good chat with you. For the time being, though, we'll slip into a short break. On the other side, we'll focus on one of the auto ancillary companies, Varroc Engineering. They reported a rather good set of numbers. We'll get chatting with Mr. Mahinder Kumar, the global CFO.